A warm welcome back. This is the Big Small Business Show. Now, risk and reward are common terminologies used in the world of business. In a nutshell, it means that if you're going to take some risk, the amount of money you should stand to gain needs to be commensurate with the risk that you took. Joining me now to unpack this concept in plain English is Ricardo Teixeira, CFP and Chief Operating Officer at BDO Wealth Advisers. And he's based in Joburg. Welcome.
Thank you very much, Allon. Great to be here.
Right, so let's talk about risk, because we as entrepreneurs, we are risk takers. But what does it really mean that we take risk?
Correct. So I think the starting point in terms of risk can very much depend on the context of who's asking it and what's the purpose of the conversation. But from an entrepreneurial perspective, what you described there, I would say, Allon, and describe it, and what we do at BDO is that risk is to dare. It's to take a decision where that outcome is uncertain, unpredictable, and uncontrollable. And as a result of that, you're not quite sure what's going to be the outcome, but you're willing to put something at stake for a potential gain. And that gain could either be positive, or an upside could be positive or negative, but it's an uncertainty of it is, for me, what defines risk at its core essence.
And talking about risk, I see you took a risk of a very formal guy taking your shoes off and having some fun here. Let's hope that the reward is commensurate with the risk that you took. I spoke about the commensurate, the equality, some notional view that the higher the risk, the higher the reward, the lower the risk, the lower the reward, that there's some relationship between these two concepts.
Right. And I think what often our brains and our brains are wired to almost draw a linear relationship between risk and reward. And I think we almost maybe taught that academically, that more risk you take, the more reward that you would expect to gain. But that's not true in business, and not true in any aspect of life, in that the risk is, like I said earlier, is uncertain and unpredictable. But so you're not quite sure whether that's going to be a gain. And so that reward might actually be a negative. And you see it in a lot of business owners where you take risks and there's failures. I think the reality of that relationship is that the more consistently you take risks and calculated risks, the higher the probability that that reward will be positive. And I think it's that relationship that we often draw on.
Say that again, the more consistently you take risk.
Correct. So I think the more that you're willing to actually put your neck out, make a decision, you're going to get it right. You're going to get it wrong, but you're going to learn from it. So if you do it once off, that's a bit of a 50-50, I guess, is it right or not? But if I do it consistently and over time and religiously, guess what? I think it'll be more successful than if you just did it once. Correct. Okay. So the probability of of having a positive outcome, I think, is increased. And that's that relationship. And then I would describe, and what we talk to our clients at BDO, is that it's not linear. It's all about what decisions are you taking, how are you arriving at those decisions, and then bearing out that over time, learning from where you actually possibly didn't get it right.
Now, I know that you're involved in investments, etc., or advising on investments. But as an entrepreneur, the biggest investment is my business. I mean, I've not just financially, but emotionally as well. We take a huge amount of risk on this single thing called our business.
Absolutely, correct, yeah. And I think that concept is often underlooked and not taken into sort of conversation when you're looking at wealth creation. So as certified financial planners advising our clients on wealth creation, it's not just about the investment alone in terms of my retirement saving or my investment savings. It's actually about that business asset. And the business asset is the largest asset that it's one of the most significant assets you use to create the largest amount of wealth. So if you know how to leverage it, you know what the rules are, and you know how to play the game, you will be wealthy.
Let's talk about leveraging this now, but let's first talk about the risk mitigants, because we do, as entrepreneurs, we do take risk, but we also try and ensure that we have some mitigants in place. What advice would you give to entrepreneurs in terms of how they reduce the amount of risk, even though they're taking it, that they're reducing it as best as they can?
Okay. So I think your precursor to that question is right, is that as a business entrepreneur, you must have the appetite for risk. So if that's not your appetite, then you shouldn't be in business. But once you've taken that leap of faith and you're backing yourself, it's all about, for me, information and knowledge. So on what basis are you making that decision or taking that risk. And I think the more strategic you can be in terms of understanding the market, understanding the economics of your business model, having research, and being able to make a calculated and informed decision, I think you are able to mitigate against the downside. So for me, Allon, I'd say that, and advice to entrepreneurs that we would give is to say that don't treat risk as a gamble. Gamble is uncertain, as is a risk, but it's not calculated. It's really just a bit of a play, red or black. Whereas a risk is around an informed decision. And the more you can be informed about it. So having a business plan, actually applying your mind to what is going to be our differentiator as the business, what will actually make us more successful than other competitors in their space is going to be, I think, your best protection against risk. Yeah.
Let's move to the other side of the coin. You spoke about leveraging the opportunity. The reward. What were your exact words? To leverage the...
So I think leverage the experience of actually taking risks or making decisions in business. But if I can, I think there's possibly, to your point about leverage, I would suggest there's two perspectives that one should consider as a business owner. And you're quite right. The one is, once I'm taking risks, how do I learn from that and how do I take more? And so there's, I think, a whole conversation around actually learning from those risks and actually capitalizing on your experience so that you make better decisions, take better risks, and get a better reward. So that's the one perspective on leverage, on risk. The second is, as you rightly said, your business is one of your most valuable assets, and it's the source of your wealth. So I think what needs to be considered, and particularly from a personal wealth creation perspective, is when do you divert wealth out of the business and when do you keep wealth in the business? And that's quite a difficult conversation, and a lot of entrepreneurs overlook that, and they either keep it all in the business or take it all out, and neither is right. And so it's that balance between actually leveraging your success. So you've been successful through the risks you've taken, you've created some form of financial reward or gain. When do you divert that capital out so that you start creating other investments and other businesses?
I think that is such an important question to look into. We talk about taking money off the table.
Correct.
You know, because your business, quite honestly, it could be worth X today and it could be worth 0 tomorrow. You know, just things can appear out of nowhere.
Exactly.
And completely decimate you. And the fact that you've removed cash off the table means that you've mitigated your risk. And so you're right, it's a very difficult decision to make, because if you take cash out of the business too soon, you starve the business.
Correct.
And if you leave all the money in the business, then you bear the risk of losing everything. So what would you say are maybe some triggers to think about when is sort of the right time, even just start thinking about when to take out some part of the wealth?
And how to live, okay, so there's a couple, and I think I think what immediately comes to mind is that concept of return on my capital. So there may come a point in time, and most businesses face that, where the amounts of cash or capital that you've got within your business, you actually can't leverage quick enough to get a return greater than what you could outside of that business. So if you are not able to achieve a return greater than inflation plus, let's say, 6%, then you should be questioning yourself to say, well, actually, should I not take capital out and put it into markets, put it into equities?
That produces that return.
That produces a return. So, and so if you go back to theory, it's one of, or business theory, it's one of what's that return on equity. So, but taking that out of the equation, it's the simple principle of actually, if I'm going to be successful in business, I'm going to take risks, but I'm going to use my capital to actually create future wealth. And if that return is likely to be greater than what I could get outside of my business, then you keep it in.
It's a good place to end. Thank you very much for your great insights today, Ricardo.
Pleasure, Allon.